How we doing, traders? How we doing? Welcome to the SPACs attack. How we doing, Chris?
Hey, what's going on, guys? What's going on, Mitch?
All right, how's everyone doing? Let's go ahead and let's hit the like. Let's start sharing this with our friends. We have an exclusive today, guys. I'm really excited to have an exclusive and a special guest with us today. So until we get into that, let's go ahead and let's get into the headlines. I want to hurry up and get through these headlines. It's a lot to touch. So let's get into Chris right quick. I know Chris has a lot of headlines to touch. So let's get into that and take us behind the headlines, Chris. All right, Chris, what do we see out there and what's moving?
Yeah, so guys, we have an exciting day in the SPAC world. This morning, there was a deal announced, so we're going to hit on that first. So Pure Cycle Technologies, this is a plastics recycling company, which is going to go public with Roth CH Acquisition 1, symbol ROCH. The merger values Pure Cycle at an enterprise value of $1.2 billion. So this company has a revolutionary and proprietary cost-effective method to recycle polypropylene. They have the only patent on this method. They already are partnered with Procter & Gamble, Total, BMW. Time Magazine called this one of the best 100 inventions in 2019. They do have a royalty-based license, which they pay to Procter & Gamble, the original creators of this technology. So this is a 170 billion pound annual market for this type of plastic. It's 28% of the world's demand for polymers, and only 1% is currently recycled. So they are working on building several plants. Their first one is under construction, and they will start in 2022 and hit full capacity at that plant in 2023. So they have an ultimate goal of 30 production lines by 2030 and 50 by 2035. They landed a $300 million bond and debt offering to help finance that first production plant. So they see revenue hitting $8 million in 2022 when that plant does come online, but it's going to expand rapidly. It'll hit $224 million in 2023 when they have 5 plants online. So by 2024, they expect to hit $800 million in revenue and have EBITDA margins of over 50%. So that's definitely a SPAC worth watching. And then on Friday, we had Natural Order Acquisition Corp. Priced their offering. They raised $230 million. So this is in the plant-based food market space. It's led by Paresh Patel, who was an executive producer on the Game Changers documentary from James Cameron, which kind of talked about the meat and protein market. And then also Sebastiano Cosia Castigliano, who's a well-known investor in the plant-based market. He invested in Beyond Meat back in 2013 before it went public and has investments in over 50 plant-based companies. He also is tied to that SPAC. So you have 2 well-known people in the industry launching that SPAC. That market's growing, as we've seen with Beyond Meat and Tattooed Chef. So I think that's one definitely worth watching. And then on Friday, we had DoorDash filed their IPO. So this is the largest player in the U.S. Delivery market. So they have 18 million customers. They have that 50% market share compared to Uber Eats at 26%, Grubhub 16%, and Postmates, which is merging with Uber, at 7%. And only 6% of the U.S. population was on DoorDash's platform in September. So they think they have a long runway of growth. In 2019, they had revenue of $885 million. And in the first 9 months of 2020, that total has risen to $1.9 billion. Off-premise restaurant market is believed to be over $302 billion, and less than 3% market share right now belongs to DoorDash. So again, long runway for growth. This is going to be one of the hot IPOs you're going to hear about, expected to price before the end of the year. So we got an early look at that data. There's an article out on the Benzinga site, and that's one that we'll be talking about over the next coming weeks. Then we had Nuvi, which also announced a SPAC deal with Newborn Acquisition Corp, symbol NBAC. This is a company that was funded by Toyota and is an electric vehicle charging pioneer. So rather than focus on the infrastructure side of things like ChargePoint and Blink, which we've talked about, They're focused on the software side of things. So this is another SPAC worth watching. And then of note, I think space SPACs deserve some attention. So as everyone's probably aware, there was the SpaceX rocket that launched last night, taking 4 humans to the International Space Station. And that's going to start a new era of NASA human spaceflight. So we've talked, and we had on our watch list Stable Road, SRAC, which is merging with Momentus. They are a hub and spoke space infrastructure play, last mile space delivery. They do have a deal in place with SpaceX through 2022. And then they also will be in the satellites market in the future. So this is a deal going through a $1.2 billion valuation. They see revenue hitting $1 billion in 2024. And they do have an upcoming mission with SpaceX expected in December. Barron's called this the zero gravity logistics player and the FedEx of space. And I think this is one that really is going to get some attention as that space trade goes on. Then we have Virgin Galactic, which is a former SPAC, symbol SPCE. So this is that first IPOA from Chamath. You saw this one hit $42 back in February and March. This is at the $22 level again. It's going to get a lot of attention from the SpaceX news, and also they are testing their own flights. That was scheduled to happen soon, but then this morning they did come out with the news that due to COVID-19 restrictions in the state of New Mexico, they have postponed that. It was originally planned for November 19th through the 23rd. So they are rescheduling, and we will monitor that. So you might see a little dip in shares as that was kind of built in. But I think this is one definitely worth watching. And then the last headline I have is Fisker. It's one of the hot former SPACs that we've talked about a lot on the show. And then also, you guys asked about in the questions a lot. I think this one could hit double-digit gains again, possibly this week. Henrik Fisker promised an engineering milestone and originally said that announcement was going to be made on November 15th, is what he said on Twitter, which was yesterday. No announcement came. But he will be appearing at the Reuters Future of Design panel today at between 1:35 p.m. and 2:15 p.m. And I think that we could get that news revealed. And again, this stock could take off on any sort of announcement from the company that was or was not expected. So keep an eye out for that, symbol FSR. And that's it for headlines.
Yeah, definitely. You can tell Chris definitely knowing what he's going to talk about today. So let's go ahead and let's get into some other topics today. I know that you just mentioned the space one, so I just wanted to talk about that one. I like another one in the satellite world, Maxar. I just wanted to bring up that one. Definitely keep an eye on this one. This one also dealing with the satellites. So I think to closely watch SRAC, you also could watch Maxar and seeing how they're doing. Okay, so one of the things is we definitely have a special guest here today. I'm going to let Chris introduce our guest. We're about to bring him on. It's about to be 11:10 here. And definitely, I'm excited for this. It's really what we're doing this for, guys, is to get you guys the best information that you guys can do so you guys can make your informed trades in the SPAC industry. All right, so let's go ahead and let's get to our special guest today. Chris, go ahead and welcome him in here.
All right, yeah, so our special guest today is Julian Klymochko. He is the founder and CEO of Accelerate Funds. So they offer 4 alternative ETFs that trade on the Toronto Stock Exchange, including the Accelerate Arbitrage Fund on the Toronto Stock Exchange. That's symbol ARB. He's also the author of a book about being a hedge fund operator, and he hosts the Absolute Return podcast. So welcome to the show, Julian. You're actually our first guest on SPAC's Attack. We're happy to have you on here. So how's it going for you this Monday morning?
Hey, Chris. Hey, Mitch. I'm doing great. Super busy day, a lot going on, as you mentioned. So I'm excited to be on the show.
Yeah, super excited to have you. One of the best things to have at the end of the day is experts in the industry, and that's really what we want to go ahead and bring on. So that's why we have you here. So we'll get right to the questions here. Chris, let's go ahead and nail these questions down. Give us some information, and let's go ahead and get into it.
All right, Julian. So we'll dive in some questions here. So first, I was wondering if you could tell our viewers kind of a brief history of yourself.
Yeah, for sure. Been running hedge funds and alternative strategies for well over a decade now. I started Accelerate in 2018 with the mission of democratizing alternative investments. So I worked on the private hedge fund side for a long time. And over there, people would ask me what I do. I say, well, I make rich people richer. And I always thought it was kind of unfair how we would have some of the best strategies offered only to accredited investors or wealthy investors, institutional investors. So started Accelerate to launch hedge fund ETFs. And so we've launched 4 of them onto the TSX and really looking to democratize access to institutional caliber hedge fund strategies. And one that we can talk about today is our SPAC arbitrage strategy, which is a core component of the Accelerate Arbitrage Fund, our SPAC ETF that trades on the TSX.
Perfect. So you kind of answered some of my other questions on why it was important to launch that arbitrage ETF in the SPAC industry. Again, talking about how private investors didn't have access to those that the same funds did. So how easy is it for American investors to get access to your funds with them traded on the TSX?
It really depends on which brokerage firm you're using. So investors would have to just check their brokerage account and see if they do have access to the TSX. I assume most would, but it really depends. I've had people from Fidelity asking me, and at Fidelity, you definitely can. So it should be doable.
Awesome. So you mentioned there's 4 ETFs. Again, that ARB one's the one that we kind of want some more information from you on. But I was wondering, how active are you with the 4 ETFs? Are you involved in all of them or kind of focus on one?
Yeah, they're all systematic and so run by just our algorithms. So I designed them all, and we have a research team, running them. I am focused largely on the arbitrage strategy. That's kind of the one that requires the most amount of just manpower and time dedication. So we're largely focused just on SPAC arbitrage, and there's so many SPACs up and out there these days that it does require a significant amount of work just keeping up to date on all the news and all the new filings.
Perfect. So some of our viewers and readers may be familiar with merger arbitrage and SPACs as well, but I was wondering if you could kind of explain the basic concept of arbitrage to both merger and SPACs to some of our viewers who may not be familiar with the topic.
For sure. And so merger arbitrage, it's a strategy that has been around for many, many decades. It was a strategy that Warren Buffett actually relied on back when he was running his Buffett partnership days, and he generated exceptional returns with merger arbitrage. And the way that strategy works is there's a publicly announced acquisition, and the stock will trade to a discount to the consideration offered just to account for deal risk and liquidity. And so an arbitrager would step in, provide that liquidity, buy it at a discount to the consideration, and earn that discount as the deal completes. And so if we look at just a basic example, would have been IBM's acquisition of Red Hat, which occurred about 18 months ago. IBM announced the friendly acquisition of Red Hat at, I believe, $190 per share in cash. But the first day after the announcement, Red Hat traded to about $169 in change, such that an arbitrager could buy stock there after the deal got announced and earn that roughly 12 to 13% return over the next 250 days, which equated to roughly an 18% annualized return. And the goal is to earn that irrespective of what equity or bond markets do. And so you try to make it an uncorrelated strategy. So that's a basic primer on merger arbitrage. The other type of investment in merger arbitrage, if it's not an all cash deal, it could be all shares or mix of cash and shares, where you would buy the target, then short the acquired stock, really with the goal of locking in that spread and earning it as the deal closes once it satisfies all deal conditions, which can take anywhere from 45 days to as long as a year or even longer. Then on the SPAC arbitrage side, which is really the market we've been focused on these days in the Accelerate Arbitrage Fund, is the main component of SPAC arbitrage is that they allow you to redeem your shares at the vote. And if they don't get a deal done, then they liquidate for the underlying net asset value. So typically a SPAC will IPO units at $10 per unit. That unit will include shares and warrants. And we've been buying units in the market at or below net asset value, just so you can have that airtight arbitrage where if they announce a deal and the market doesn't like it, and then you can redeem your shares and earn that steady return, basically the same as treasuries, but you get this warrant upside. And if it's a real positive deal, like Chris, you mentioned just today, that Roth CH deal got announced, stocks up a bit. So we do have a position in the Accelerated Arbitrage Fund, which we bought that one a while ago, kind of in the spring or summer. And so if it trades up above net asset value, then the arbitrage firm can go and exit that position. So yeah, we're buying in sort of the 990 or lower space, and so we can sort of systematically exit over the next 3 months as the deal closes. So we really like SPAC arbitrage, given that it's low risk, as long as you're buying at or below net asset value, and we track net asset value on all 225 outstanding SPACs. Then as long as you can hold on until completion, either vote or liquidation, then you can't go wrong with the strategy. It's low risk, consistent returns, and provides a really attractive risk reward, in my opinion.
Yeah, one thing, just to jump in here, Julian, I definitely noticed the pattern kind of earlier, August time. When did the ETF start? When did you guys open it?
So I've been running that arbitrage strategy since January 2012. So got nearly a 7-year track record because I ran it for 6 years as a private hedge fund, launched Accelerate, then relaunched it as an ETF in April. So we launched it on the TSX in April, ticker ARB. And then, so it's been running over 7 months now and has good returns so far. Owns over 80 SPACs and about 3/4 exposure to SPAC arbitrage, with the remainder in merger arbitrage. So widely diversified, targeting a 6% volatility, so low risk, and pays out a 3% distribution yield.
All right, Chris. I think you got one last question here.
Awesome, Julian. So I know. Yeah, and I wanted to tell people, so in this YouTube video down below, you can find Julian's Twitter. You can find a link to that fund, that group of funds. I know I've followed him on Twitter for a while. He does post pretty often about net asset value on some of these merger deals and those SPACs. I've followed his advice or his post before about like Tiffany, where we didn't think that deal was going to go through with LVMH, but then it came through at a lower price. Also today we had the lowered price target deal out from Simon Property Group on acquiring Taubman. So again, Julian, I consider you an expert in this field. You've got the experience running that model and now these ETFs. So I guess one question I had that our viewers may want to know, what have been some of the best SPAC investments that your funds have made this year in terms of that net asset value recapture?
Yeah, for us, Diamond Peak Holdings was a big winner. So they announced the transaction with Lordstown Motors, and now it's trading as RIDE. So we were able to buy that one below $10, and it traded up as high as $30. So that's a great premium because you could buy it with practically no downside, assuming you can hold on to maturity. So that was a big winner for the arbitrage fund. There have been a bunch of other ones as well. One that we currently do hold is LifeSci Acquisition. That one was really, it's a small one, flying under the radar. They recently announced a deal with Vincera Pharma in late September, so it should close this quarter. We are long that stock in the arbitrage fund, and it has rallied significantly, bought it below $10, and now it's north of 16. And so, yeah, another winner there, but Diamond Peak, DPHC, was probably the biggest winner this year.
All right, so let's go ahead and let's get into some other type of questions here. One thing I did notice is Chris and I both read that article where, of course, mentioned the famous Warren Buffett quote, majority of the people, they start selling when everybody is in the panic. And really, at the end of the day, majority of the times, at least we've seen in patterns, that it's usually that's going to be the time when you can really start finding that discount and get into the market, find those cheap evaluations. So let us know a little bit about how you feel that kind of time went with the pandemic. I know you guys mentioned like a lot of the higher seniors and people that were looking at their retirement kind of sold out and sold their assets. So let us know a little bit about that environment, and what are you seeing now, Julian?
Yeah, so Q1 was the quickest bear market of all time, and basically all risk assets were affected, not just equities, but corporate bonds, even treasury bonds became somewhat illiquid at certain points. Obviously, merger arbitrage spreads blew out pretty significantly, such that it was pricing in basically half of deals were going to fall apart, which in fact did not come true. And SPAC arbitrage spreads blew out a decent amount. So our SPAC index, we track a SPAC index that traded down roughly 7% peak to trough. So not a huge drawdown, but they did trade down to a point where you could be buying SPACs in the, say, 950 range, such that, if you can hold until maturity, that provided a nice low-risk return for investors. So there's a tremendous amount of opportunity in March and April. Less so now, specifically in merger arbitrage, because the pandemic has really led to a dearth of deal announcements. We did see 3 come out today. However, the total amount of deal volume is lower than what we have seen historically. Conversely, the SPAC market, ever since the summer, has just gone absolutely wild with a ton of issuance. There's been roughly 50 billion of issuance over the past 6 months. And there has not been a commensurate increase in capital provided to firms to invest in SPACs. So with the flood of SPACs into the market, it's created, a bounty for investors such as myself, because we really have, a ton of supply, not enough demand, such that prices are very, very attractive, leading to what I believe attractive returns on a go-forward basis, specifically for new issued SPAC units.
Yeah, one of the things that we definitely got is we had that period of time when just about everyone was watching the SPAC industry. And I feel like there's been kind of this little pullback. And like always, I feel like stories, come with the swings. There's always waves to investing. And so one of the things that I'm definitely going to be looking for is when we're going to get that next kind of boom cycle, that next wave up. And some of the plays that I'm looking at is always, I at least from what I've seen, after merger, a lot of the times we're going to get that kind of a little bit of a downturn because evaluations come into play. Can you let us know a little bit more about after merger and kind of the stats that you're seeing and the patterns that you see there?
Yeah, after a SPAC announces a deal, sometimes it does trade up and keep on going, or sometimes it just, people don't care. So it's really difficult to discern or make any sort of forecast on which ones the market will like and which ones the market won't, and the trading pattern after deal announcement, but before closing. So yeah, it's really tough to say, which is why we keep such a highly diversified portfolio. You're never sure which SPAC is going to hit. That's why I caution investors to, it's a tough strategy to do individually, because like I said, we advocate for wide diversification. We own north of 80 SPACs in our Accelerate Arbitrage Fund. As an individual investor, it's not really realistic to be able to own that portfolio on your own and keep up to date on all those positions and all the corporate actions, whether it's splits or votes or redemptions, liquidations, etc. And so that's kind of something that we're a big proponent of, which is diversification in the SPAC space, just because, who's going to announce a deal, when it's going to be, and is it going to be high quality? It's just, you really can't bet on the sponsor. I know some people try to follow that strategy of saying, oh, we're going to bet on, say, Chamath because he does good deals. However, you look at 2 deals that he announced recently for IPO C and IPO B. So if we look at IPO C, started IPO B, which is Social Capital Head Sophia 2. They announced the business combination with Open Door, and the stock really took off. The units are actually north of $20, and the common shares are nearly $20. Now, if we look at IPO C, which IPO'd the same week, Social Capital Head Sophia 3, same sponsor, they announced a deal with Clover Health October 6th. That one has pretty much been dud, such that the common shares are trading at roughly $10 or $9.98, which is actually below its net asset value. So getting zero premium. And that's exact same sponsor issued during the same week. So, if you're only betting on sponsor, then it's not a strategy that's guaranteed to work.
Definitely great information, Julian. I appreciate you definitely looking out for all the investors out there, especially in a new asset class, or relatively, at least in the interest for majority of investors. It's always great to get this information. I'll let Chris go ahead and finish up here. I think he has one more last question for you.
Yeah, so I was curious. One of the concepts is the heads I win, tails I still win. So I was wondering if you could kind of, talk a little bit about that and kind of the low risk play here with the net asset value coming into play.
Right. Yeah. So we consider SPAC arbitrage the way that we affect our SPAC investing, a heads we win, tails we win big type strategy. And so we're focused on buying SPAC units at or below $10 NAV, or even if they have an overfunded trust, we could pay over $10 and still get it below its trust value on a per share basis. And so what that entails is you buy at, say you're buying one at $9.95, you own the shares and you own the warrants. And say they announce a deal that, or in the worst case scenario, they get no deal, they liquidate, you get back $10 plus accrued interest and your warrants are worthless. So you do get the return of that discount plus treasury yields, call it 1%, which isn't great, but that's the worst case scenario. And then in the sort of middle case scenario, say they announce a deal not well received by the market, you redeem your shares. However, you do still have warrants which have, say, $1.50 per warrant value. You get a third of a warrant per unit. That's still a 50 cents in value, additional upside above the $10. So call that a 6 to 7% return, taking into the NAV discount, the accrued interest, and the warrant. And then in the tails we win big scenario, you buy the units at or below net asset value. They announce a deal that's exceptional, that the market loves, and takes it up well above its $10 net asset value. Take, for example, Diamond Peak with Lordstown or Diamond Eagle with DraftKings. Those shares won an absolute tear, such that your SPAC is now worth significantly higher than the $10 IPO price. And so that's kind of how we think of the strategy. Heads we win, tails we win big, such that we view that it has low downside risk as long as you can operate it effectively and efficiently.
All right, perfect. I had the whole
Awesome,
little
Julian.
music there. So thank you very much, Julian. I really appreciate you taking the time. And if you guys haven't checked him out, I definitely have his Twitter down here in the description below. You can also get the company and definitely check it out. Do your own research. They have great stats on their website. I was going through them. So definitely go on there, check out their research, and you can go ahead and make your own investment decision. All right. Thank you, Julian. You have a great one. I appreciate you coming on here, the CIO and CEO of a venture. And thank you for coming on.
All right. See you guys. Cheers. Have a good one.
Thanks,
all right,
Julian.
Let's go ahead. All right. So, Chris, thank you once again, the man with the plan, bringing on the experts. And that's really what we're doing it here for, guys. At the end of the day, we're trying to get you guys more information so you guys can understand the space, and not only of SPACs. We're also going to be touching IPOs later on this week. There's a lot of IPOs coming out. So with that, you need the information. So if you want to go ahead and stick with us, definitely hit the subscribe below, hit the like. We're going to keep doing this every single day to get you guys more information. So Chris, is there anything else you want to leave us off with today?
No, I want to say thanks again for tuning in. Remember to hit like and subscribe to Benzinga's YouTube channel. We want to thank today's guest, Julian, the founder and CEO of Accelerate Funds. We appreciate his time and commentary on the SPAC market. And we look forward to having him on the show again. Tune in every weekday at 11 a.m. for SPAC's Attack. And be sure to tell us which tickers you want us to cover. And we're going to be hitting IPOs later this week. And we do have some more guests lined up, including the CEO of a company that is going public via SPAC. So we're looking forward to that this week as well.
Yeah, definitely, guys. Definitely have to give a thanks to Julian, giving us some great information on that arbitrage fund. It's on TSX, Canadian ARB. Definitely, at the end of the day, what the fund's trying to do here is outperform the S&P merger arbitrage index, generate consistent low volatility returns, and provide an attractive distribution yield. As you can see, they definitely have a great strategy going towards SPACs. It's kind of one of the things that I was thinking about before I even, before we started this show. Chris and I had even done some stats on which ones go underneath that $10 mark, stay there for a little while, get back above that $10 mark, and then get to that up and beyond. One of the things that I noticed, at least, was, and I mentioned this before, was that 2-day level above $10. If it can hold 2 days above 10, that's really when I get excited about these SPACs. So you definitely got some great information. If you just joining us, definitely go back, hear that interview. There was so much information given, not only on the actual fund, but also how you can approach these SPACs and keep your risk low. All right, Chris, thank you. Like always, the brains of the show, the man right here. All right, guys, that's going to be it for us today. I'll see you guys tomorrow. And like always, when SPACs attack.